You're listening to Investigation Insiders by Integris Intelligence.
Hello again, everyone. Welcome to another episode of Investigation Insiders. This is Forhad. Hope you are all well and safe. I can't believe we're almost done with the first quarter of 2023. Time continues to fly, and we really appreciate you giving us your time to listen to our show. Thank you. I'm so excited about today's guest, another mentor and great friend, Jay McKillop. How are you, Jay?
Good morning. Great.
Well, I had to twist Jay's arm a little bit to join the show, but you'll see why by the end. And like most other guests that we've had, Jay and I have known each other for many, many years. In fact, when I first started in the security business at Guardsmark, Jay was one of my first clients. And you've heard me talk about all of the great people in my life who have taken a great interest in my personal and professional well-being. Jay is definitely one of those people, and I can go on and on about this, but our listeners came to hear you speak, Jay. So if we could start with a high-level overview of your career.
Yeah, so I grew up out on Long Island and went to school in Albany at State University and graduated with an accounting degree. And what ended up happening is while I was up there, it was an opportunity to work as an auditor for the what was then the New York State Special Prosecutor's Office. And I took the job. It was down in Long Island where I grew up, and from there I was able to work with a couple of other people and accomplished getting my CPA. And from there, I ended up over as a special agent with the Internal Revenue Service. Spent about 5 years there, and switched over to the FBI and did that for about 5 years as well. And it was a great experience. I really enjoyed my period doing that in law enforcement. I was particularly focused on the white collar crime. And then I stumbled in, the best description I always make is I stumbled into this job over at the New York Times, where I spent 20 years working there as doing security and building operations, and left there a few years ago and did about 10 or 13 years in banking. So that's the thumbnail.
So, what was the reason? What compelled you to join the New York Times, leave the FBI? I know how much you love being in the FBI, and I know how much you love being in law enforcement. What was, why'd you decide to leave and go to the Times?
Yeah, at the time it was 1987. I'm sorry, 1983, and there were they didn't have any locality pay back then, so everybody was making the same money in New York than you were making in Louisiana. And I wasn't really looking for a job. I just kind of, like I said, I stumbled into it. My supervisor mentioned it on the way we were walking to Chinatown, and he just mentioned that there was a retired agent up there and they were looking for somebody, and it was significantly more money than I was making. And I ended up making a phone call, and he said, "Hey, it's funny you called. I just hired somebody." So I was relieved that I didn't have to go through the decision-making process. And in about maybe a month or two later, he called me and said, this other guy decided he didn't want to take the job. It's something to do with the commuting and whatever. So you're still interested? And so I went down and talked to him, and one thing led to another, and I ended up taking the job and spending over 20 years there.
Yeah, I mean, you had just a terrific run, and I was happy to be a part of it. Since I guess that's where you probably spent, the most time in
Yeah.
your career. Can you tell us about some of your sort of favorite memories from being there?
Well, I always say to people that it's a very misunderstood place. People think that they've got it in their mind what they think it would be like to work for the New York Times, and I can tell you it wasn't like what people perceived. My experiences were phenomenal. I worked with some really, really great people, and the work that I did was really, really interesting. And as you mentioned, and I've said to anybody who would ever listen to me that I mean, I love my experience at the New York at the FBI. That was another phenomenal place to work. But the Times was, I worked for these great managers. I learned to become a manager there. I learned how to, treat the people that work for me, and I learned to work well with the other people. It was one of the things one of the vice presidents said to me that when you work for the government, all of your relationships are transactional. You go in, you have a relationship, case goes in, you deal with people, and you move on. He said all our relationships here are ongoing. That you're dealing with people, the same people every day on a whole myriad of different things that happen. So I got involved there. There were some fascinating things that happened. We were in the middle of the Unabomber sending correspondence, and we had all kinds of there were labor issues. There were all kinds of interesting investigations and these investigations were maybe not that big a deal in the scheme of things, but in our little world, they were a big deal.
Yep.
So I really enjoyed it, and like I said, I worked for some really, really good managers.
Yeah. Yeah. I remember the thing you bring out, you talk about as far as people and connecting with people. I remember you telling me, again, as a very, very young man, that, people buy people and then they buy everything else. They buy products, services, the program you're
Right.
trying to sell, whatever it was. And I mean, again, you mastered that, and fortunately, you departed some of that wisdom to me, and I always used it in terms of dealing with people. So it you transition from the Times
Right.
to um, going back into the financial world, right? And you
Yeah.
started with Barclays in 2008. So obviously, just based on everything going on in the world and the U.S. economy at that time, I imagine that was probably pretty interesting.
Yeah. So, for people that don't remember, 2008 was the Lehman Brothers, the and all these bank failures that were going on. And I started at Barclays, and 5 months later, and Barclays was a relatively small bank. Uh, and the next thing you know, they're talking about Lehman Brothers, and Lehman Brothers was going to fail, and the federal government was negotiating to try to to get one of the bigger banks to go in and absorb the assets of Lehman Brothers, and went in one day and they said, "Hey, we're taking on all these assets," and it really turned your world upside down. You went from, I mean, it just the security department at that time was me and one other guy, and then there were all these other people that were at Lehman Brothers that were going to come over, and we had all different locations that were going to be brought into our sphere, and the people were unfortunately for them, were going through, it was a crisis of not everybody was going to come over, and the ones that came over, it was all very, very new, and the culture was different, and so there was a lot of things going on at the time. But we just kept putting one foot in front of the other, and ultimately we brought the whole thing and landed that plane.
Yeah, yeah. No, I remember it well. And again, unfortunately, the inspiration for today's show comes from the current banking crisis
Right.
and what it means from a sort of security and investigative perspective. Um, how do you think that time? I mean, look, we can't obviously address every detail, right? But from a high level perspective, how do you think that time compares to what's going on today?
Well, I think, as you just mentioned, I'm not sure of the very high level stuff, but it was, pretty obvious to me that there were a lot more serious problems back then. There wasn't just Lehman Brothers. There were a lot of other banks that were teetering, and there was clearly a financial crisis going on. I remember, all kinds of liquidity problems where I guess these banks had all these assets on their books and they were below their market value, and they weren't. They had difficulty in being able to borrow money, and so that momentum kept going and going, and it was a very, very serious thing that everybody was going through. And but not for some of the measures that were taken. I think you could have seen a banking Armageddon, but now, it is a little troubling, 15 years later, that, here we are in some respects going through the same thing.
Right.
Where were these ongoing stress tests to make sure that the banks were prepared for, higher interest rates and the value of whatever assets they had on their books now that they were going down, and liquidity problems and all the same kind of things we heard about back then.
Yeah.
And having gone and spent all the time at the banks, it just I shake my head that that there were every day you'd be getting a phone call from somebody about there's some kind of a compliance thing you need to do. There's some kind of an internal audit. You need to evidence all of the things that you did that happened in some data center. Show us all the access or all the people that. And it's like my impression is that they sit there and we're looking at the pennies, and meanwhile the big things are happening at a much, much higher level, at a macro level, that nobody's paying any attention to. But that's just from down in the trenches.
Yeah, that's a really interesting point about because obviously we both know a lot of folks that work at different sort of banks, and you hear the same. I think that's such a critical point, that there are so many compliance measures that have nothing to do with the money, and just are they stable and all those sort of
Yeah.
things. And it seems like everything is being watched, but are there should there be concern that you're watching everything but nothing, you know what I mean, like, and these kind of
Right.
things. And we talked about like even the KPMG audit, and the fact that they basically gave them the thumbs up just shortly before all this stuff happened at both banks, Signature and SVB.
Right. Right.
So
Yeah. You really have to, and if you remember back in 2008, all of these Moody's and these other rating agencies were giving these bonds and these different financial instruments all of these high ratings, and then when you turn around one day and it all just evaporates. The same thing with KPMG and the auditors that go in there and are attesting to these financial statements and saying everything is fine, and then literally a couple of weeks later, they're a bank failure.
Yep.
It's disturbing.
Yeah, no, to say the very least. I mean, the SVB collapse is an interesting case study for many reasons. Can you? I mean, I'm sure you've read up on this and are familiar with generally of what happened. Can you provide just sort of a broad overview of what happened there?
Well, from what I understand, it's just the the bank, they zigged when they should have zagged, and they had whatever the value of the instruments and what they had on their books and records became less valuable. And at the same time, these interest rates are going up, and it becomes increasingly difficult for they have to be paying out more. They're borrowing money on a daily basis, so it becomes this, like I mentioned earlier, just a liquidity problem. They don't have enough cash on hand to meet these obligations that are coming at them fast and furious.
Yep. Yeah, that's right. I mean, it's like at the end of the day, when you look at the problem, right?
Right.
I mean, it's really what caused the topple is fairly simple, right? SVB.
Yeah.
I mean, their customers are large startups, largely startups in the tech industry that hit hard times and started withdrawing money, right? To fund it, they had to sell those, like you're saying, the treasury bonds and other long-term debts. And because they lost value, like you're saying, with the interest rates going up, now they couldn't meet those demands. So, I mean, how do you think the compliance and risk mitigation measures failed to anticipate this happening before it was too late?
So I think a lot of times the compliance and the internal audit are looking. I can just tell you, this is from my experience, that I used to wonder why we always seemed to be the focus of every audit that. And if you think about it, at a bank, you're running a security department, and one of the things you have in a security department are access control systems, and they can tell you who came in, who was authorized to come in, who came out, and so there are a lot of restricted areas. And what they would do, the internal auditors would want to do, and anybody in compliance and things like that, well, who had access to a particular location, who had access to a space, and were they authorized to have that? So the banks go in and they build a pretty robust infrastructure to try to make sure that they meet that demand, right? They don't want to have people that have access to areas they shouldn't have. And so what would happen in the course of these audits, they come in and say, okay, you've got a data center or some other type of location, and they'd want to know who had access, and you give them a list of people, and they'd make sure that there was that they had the right authorizations in order to be able to get access, and most importantly, that access was turned off. And so the point I'm making is that they would spend what I used to think an inordinate amount of time worrying about whether somebody shut somebody's access off, when and the minutia of that, rather than looking, as I said earlier, about some of these bigger things that are going on with the LIBOR rate and the liquidity and things of that nature. So, the answer to the question, I think, is that they have a tendency to focus on the things they understand and focus on the things that are relatively easy to get the data from. So they come in, they ask you for the data. It's readily available. You can print it out. You can give it to them, and they go off and do their things. as opposed to having some auditor that came out of college 2 years ago and start talking with people in the investment banking world about the impact of the LIBOR rates having and what's going to happen to the overall financial position of the company. That's just my take on it. And that may be just the grumblings from people down in the trenches. I don't know.
Yep. No, I think that's true. And even when the focus is on some of those things, is it on the core competency? And then you also have to wonder if there's a denial, right? I mean, of we'll fix this, and then it's too late, kind of thing. You know what I mean?
Yeah.
Another factor that's pretty well documented is the increase in bank fraud when events like this occur, and the overall economy is not doing well. So,
right.
Why do you think that is?
So, my take on bank fraud is, and this is my experience in fraud overall, is fraud is generally going to be committed because there's a lack of vigilance. And what I mean by that is that people are watching what managers are doing and what companies are doing and how vigilant they are about what their practices and their policies and procedures are. And so if you're working at a bank and everybody is kind of blowing you off about we're just going to go in and we're going to do this, and nobody's paying that close attention to how we do different things, people are going to see that and they're going to say, hey, there's an opportunity here, because they're not paying attention. And the same thing, you own a small business and you get out there and you think, well, I got a lot of really important things I have to do. I'm not going to pay attention and look at what the disbursements are out of my company. And I would always recommend to everybody, my brother had a business in Texas, and I would always say to him, you got to look at every canceled check that goes out. You should be the only signature on that canceled check, and people will know that you do that, and you'll be asking questions and saying, hey, what was this for? And that deterrence will help a lot. But you see over and over and over again where, hey, I went into my boss and he just told me to just don't bother him with that. Just go in and do it. And they said, hey, there's an opportunity here. And the next thing you know, they're setting you up with a tee shot, and you got yourself a problem. And most of my experience in white collar crime and fraud, these were not sophisticated schemes. They were generally something where they set it up, they got somebody, they set up a company, and they started writing checks and cashing the checks, something like that. It's not where they were going some highfalutin way of getting money, and that's just not what I saw. And I saw the same thing even in the private sectors, as the managers that weren't paying attention. They'd get out there and they'd have people work with them, and they weren't paying really close attention to what people are doing in their expense reports. And the next thing you know, it's somebody stumbles onto it. Somebody in your finance department says, hey, what are you doing here? Why is this person, spending all this money for, something that's clearly not business related? So.
Sure. So again, you talk about, like, all the things you talked about are what creates the opportunity, right? Like,
right.
And so I guess during economic downturns, there's motivation, right? I mean, opportunity starts at the motivation is, hey, my husband or my wife lost their job. We need a little extra money. Our accounts are down. Everything is not going well. So we have this opportunity. Do I have the motivation to commit this crime? And then essentially rationalize that, right? Well, it's okay. I mean, I did a lot for this bank. I did a lot for this company. I did a lot for these people. You know what I mean? So,
yeah.
I mean, do you agree with that sort of, like, how it goes?
Yeah, no, there's no question that, if it's a dangerous combination when people have the opportunity and they can rationalize it away because they see that, oh, look at this mismanagement that's going on. Look,
Right.
look at this. They're um, the best illustration of that is what happened. One of the most famous white collar crime cases ever was the Bernie Madoff.
Mm-hmm.
And what happened with Madoff, he wasn't just stealing from his clients. That what happened, his employees started, they started their own things. They said, hey, they rationalized it, saying, well, if he's doing this to his clients, we can do, you know, I can do things. I can set up my own schemes.
Yeah.
And what was he going to say?
Yeah.
So yes, the answer to that is a clear yes. That people can start to rationalize and say, look at this mismanagement. Look at what they're doing. Look at how they treat themselves, and they don't treat us very well. And the next thing you know, it starts off with the test. I had a case when I was in the FBI about that, where a guy clearly rationalized it. We got a call, and I just went over that they needed somebody else to go in and sit on this interview, and I went over, and this young guy was sitting there. We said to him, "Hey, how'd you get that? $35,000?" And he said, I was just lucky. I said, yeah, no kidding. You were really lucky. We started calling him Lucky Leo. And he did the 35,000. That was the test run. And he had gone, and to circle back to my other point, he had gone and told his manager about the procedure they were using. And he didn't think it had very good internal controls, and that all they needed was an initials on a piece of paper.
Yeah.
And this money could be basically shipped anywhere. And so he said, well, they're not paying attention. And, 35,000 came in, and he bought himself a brand new car. And then what happened is $1 million came in, and he said, well, I'm going to, they're not looking for that either. So he ends up he tried to open an account at another bank, and the other bank realized this guy was an employee. You could tell by the account number.
Yep.
And he called us, and it was a bad day for him.
Yep. It sounds
Lucky.
like. Yep. Lucky, not unlucky.
But again,
yeah.
it goes back to the vigilance, where the manager said, "Hey, you just kind of fluffed it off and said, I don't worry about the initials. Just do it. Basically, just do what you're told."
Yep. Yep.
So.
Yep. So again, with the economy down, and the likelihood of the likelihood of motivation to take something that's not theirs, and opportunities existing, what recommendations do you have for both people and companies that would sort of help them avoid becoming a victim? I know you already touched on it, but if you could sort of summarize that.
Yeah, I did mention that it is making sure that you follow your own procedures. That the other part of that with following your own procedures, and again, it's another observation, you really should do it, because no matter what, if what happens is, if you're the manager and you're not doing it and something happens, they're going to hold you accountable anyway.
Yep.
So you might as well do it. You have a very good chance of creating a deterrence, and maybe even catching on to something. But if you're not doing it, and ultimately the person that perpetrated this is interviewed and says, there was a lack of, nobody cared, and I did, then it's gonna really reflect badly on you. So the point I'm making is that take the time to go in, and review, especially any disbursements that are going out of your company, going out of your organization. take the time and try to make sure that they are who there's some rationalization for it and who these vendors are. What are we paying for? Does this make sense? And and not be afraid to go in and question people about what these are for and why are we doing it and how do we get to this particular amounts of money. And I think if you do that, you really stand a good chance of protecting yourself. Like I said, they can't create these sophisticated systems. There's too many things in the way of doing that. So it gets back to the sort of the old blocking and tackling, that
Yeah.
straightforward. And what are these for? Look at how much you're spending to these different vendors. Why are we? Does this make again? Is it rational? Does it make sense?
Yep,
So
yep. No, that makes sense. And again, going back to the basics, I mean, you have to, like it doesn't matter how good or complicated or complex the system is. If you're not using it, it's useless. So, you got to cover your bases. And I think that's a really good point. In fact, some of the things that you're talking about, I don't know how much you've been following it, but I've been watching that Murdoch case down in South Carolina, and
right,
there's a lot to unpack on that case. So forget about everything, but one of the aspects of it was, the subject essentially at his law firm creating a company that sounded like a legitimate company that the law firm was using
right.
uh, to structure payments and paying it to that firm and basically taking the money of the victim. So that's a like you said before, that's a pretty simple scheme that had really complex consequences.
Yeah, and just to beat this point to death, you don't need a hairs and fibers consultant to come in. You just need some common sense. Take a look at it. Who are these people? What are they doing? And and ask some probative questions. And you're going to do a lot to prevent these from happening, and you'll do a lot to identify when these things are set up. I mean, time and time again in the white collar crime world, that's exactly what happens. Somebody in there decides to they set up a fictitious company, and the next thing you know, they're depositing checks to it. And I had another case where they had a similar thing to the other guy. They were people have to understand banks is that money is coming in and out furiously, right? It's all it comes in and out, and they're trying to reconcile all these different things that are happening, and then there are ones they just don't know where they go. And in this particular case, they went out there and they said they had a guy who was hired. He was an outsider. He was a consultant. And he went out and decided they approached him and said, "Look, we got this money that's floating around here. What we'll do is we will, if you set up a company, we'll take this money and we'll disperse it out, and then we'll whack it up 3 ways." And sure enough, that's what they did. And they actually went in and they thought they had a perfect crime. They thought they had destroyed all of the microfilm that was capturing all these transactions. They didn't realize that there was actually another set of microfilm. So at some point, somebody came in and started looking at this microfilm and said, "Hey, this money went here, and this is who approved it." And the next thing you know, they called me, and I walked up to that bank, and I met the security people, and they told me what had happened. And they said, "Look, when you get here, here's the phone number of this guy's lawyer." And I ended up walking downstairs in the lobby and found a payphone and called the lawyer. And the lawyer said, "We want to come in and we want to make a deal." And like, oh, holy smokes, this is the fastest case in history. And and of course we couldn't make any deals. All I did was refer them to the United States Attorney's Office, and sure enough, this guy came in and made a deal, and then that and one thing led to the other, and in fact, there was an interesting aspect. Another agent was assigned. He picked up one of these cases, and he literally walked the neighborhood looking for. They couldn't find the bank. They knew the check had gone out. It was a pretty high valued amount of money, and they knew it went out, and they just didn't know what bank. And he went in and just put a pin in this guy's house, and then went in concentric circles until he found this guy's bank account. And then once he found the bank account, they found the corresponding, the opposite entry of where the check. They knew it went out. They just didn't know where it went. And he found that and identified it. That guy ended up getting arrested too. So
I'll tell you and again, we have these types of conversations offline all the time. I just wanted to memorialize one of them, and with everything going on with the banks and increase in just motivation for people to commit fraud because of this recession either that we're in or about to get into. I thought it would make sense to get some information out there for people. Again, sometimes it's just hearing it, and I hope this helps someone. So usually we end the show, Jay, with any sort of like takeaways. If you had to tell people, and I think it would be probably what you just went through anyway, but one or two things that you would tell people, banks collapsing, financial markets not doing great, potential recession. What would you tell people that are listening to walk away with from just our discussion today?
Yeah, I'm taking a sort of a different view of it, Fahad. The one thing is to be a good manager. Treat people fairly, treat people well. All those other things are great. And I obviously believe in the vigilance and making sure that you're doing what you're supposed to do. But the one of the other things is again, being able to reflect back on all these different years is treat people well, and that is its own reward, and make sure that you look after them, and you're coming into a workplace where you have a couple of laughs and not take everything in the world so seriously. So that to me, that was an important part of my professional career. And again, I work with a lot of really, really, really great people, and we didn't take ourselves too seriously, and we were able to joke at our own insecurities and our own incompetence and our own, at the times we didn't know what we were doing. But it's important, I think, to be able to have some fun when you're going there, and banks are not usually thought of as being fun places.
Yep. No, I've never heard one person say how much fun they have every day. Not even one. Well, that's awesome. And again, one of my takeaways on sort of a more serious note is look, I mean, the economy is not well. Obviously, there's issues with banks that increases both opportunity and motivation, and be vigilant, and make sure that you're like Jay said, following your own protocol, or at least review the protocol that you have in place, making sure that it's in accordance with what you want today. Sometimes people write things and put things into place and never look at it. Well, it's got to make sense today, and don't forget the basics, and it'll help you from becoming a victim. So, Jay, I really appreciate you joining me today. I know it took a little arm twisting, but as I had imagined, it was
Yeah.
fantastic. And I would be remiss in not thanking you again for everything you've done for me throughout my career, both on a personal and professional front. And I'm very lucky to call you a friend.
Well, thanks a lot. I do appreciate it. I appreciate being your friend, and I've always considered myself a very good handicapper. I've told you that I can always spot talent. And I knew you got you had the grit to be able to make that work. So congratulations to you.
Thank you. Thank you to Jay, and thank you to everyone for listening and tuning in and supporting. And send your questions and comments our way. Until next time, have a good one.
Great, thank you.
Don't forget to follow us. We are on LinkedIn and Facebook, Instagram, Twitter, and YouTube.